Iftin, thank you so much. Good evening. We meet again. This is our fourth session, and today's topic is record retention and audit preparation. So, the objective basically is we're going to spend about the first 20 minutes going over what we discussed the previous three sessions. I think by now you know what the expectations are. One, we on our first session we discussed what can you use the funds for. For example, rent, food, um, supplies for your clients, um, COVID related supplies, and many other things, wages, bonuses, benefits, vacation paid, sick leave, retirements. We talked about those things on our first session. On our second session, we talked about separating business and personal expenses. Obviously, you're in the business of providing daycare services, and that's considered business expenses. But sometimes personal expenses can be mixed with business, but it's unallowable both at the DCYF level and both at the IRS level when you're filing your annual taxes. That was our second session. Our third session was budgeting and accounting, the importance of having financial systems, the importance of having a plan, having a budget, uh, basically doing a projection on how much revenue you expect to receive the next 3 months, 6 months, or a year, and what is your projected expenses, right? Fixed fixed versus variable. So now that we discussed the three things, what's required if DCYF knocks your business doors or home and says, "Hey, Abdul Ali, we would like you to provide receipt confirmations for the expenses you have used for the CCSG grant." So today we're going to talk about record retention and getting ready for audit. We'll have plenty of time to ask questions. And if you are joining us on today's session only and you have missed the previous sessions, please visit our YouTube page, Voice of Tomorrow's YouTube page. All these sessions are being recorded and they're being posted there. So you can actually go back and watch the recorded video. And also, you can request the PowerPoint be sent to you via email. So let's get it started. So I already mentioned what our objective is. Um, I think by now all of you know VOT's impact. It's a 501c3, and it's an organization that supports families, children, and early learning practitioners by providing dual language early learning services and resources. This is our calendar or our meeting calendar. We're here today prepping for audit, record keeping and retention, notification, response, and follow up. We're supposed to have a session next week, but we're combining it here. We'll still probably have next session to do an overview. So, but this will be our one of our last sessions for this. Remember, we have a money and grant talk starting April all the way to December. And the first 3 months, it will be 2 Saturdays of the month. And after that will be one Saturday. And this is where a place where you come and you ask all your questions relating to the grant or questions relating to uh, financial literacy. Now, let's start. Before we do that, just wanted to ask folks if you know what an audit is or a physical review. Have you ever been audited by any governmental agency? What was the experience like? I would like to hear you about this. So let's go ahead and share your experience with us if you've ever been audited or if you know what an audit is or physical review is.
You can raise your hand as well, and then I will go ahead and call you, or you can unmute yourself to respond.
Don't be shy.
So we have some in the chat box. Heather said, I've heard, I know what physical review is, but I have not been through one yet. Charlena said, yes, I know that what one is, but I've never been audited. That's a good sign.
Good. That means go ahead.
Sorry, this is Willa. I was gonna say, I've actually been audited twice, and probably the last 7 years from the childcare, the DCYF or whatever. But it actually is not terrible. I mean, they send you a letter, tell you what you owe, and they, if you need to, they make arrangements with you to pay monies back to them. I think they do have a time window though for paying them back.
I'm curious. I'm curious if the payment included penalty or interest, or it was just a back pay.
No, what I remember, it was just some discrepancies in the childcare, and that's what they had me pay back.
Good. I'm glad that the experience was great for you, because when folks think about audit, they think of a horrible experience. I practice on the IRS side, and of course, the IRS has a bad name, but they're not actually bad. They're good people, as long as you have your records straight. So we can move on.
Yes.
Thank you for sharing that with us. And by the way, being audited is not a bad thing. It doesn't mean you're doing something bad. It just means that you're randomly selected to provide documentation. Obviously, not every vendor can be audited because they don't have the capacity to do that. But also, always just imagine if you're that person that's going to be selected. So it's always good to be ready in the event that you're selected for a review or an audit. Thank you for sharing.
You're welcome.
Yeah. So we always ask why you're here. Obviously, you wanted to understand the CCSG grant, but today's specific topic, you're here because you want to know more about record keeping and retention. You want to know about how do you get ready for an audit. And before you even get ready for an audit, how are you notified by DCYF? How do you respond? How do you follow up with DCYF? Those are the things that we're going to discuss today or tonight. So before we do that, we want to make sure that we give you a recap from our previous meetings. Obviously, we're not going to go in detail. We're just going to have an executive summary or overview of our previous sessions. And this will probably help folks who missed the first couple of sessions. And also it's a refresher for you as well. Of course, we know what the CCSG is. It's a grant. It's a free money, obviously, with contingencies, right? You have to use it for workforce amount. You have to use it for program. You have to use it for add-on. It's a federal money being administered by DCYF. Its objective is to basically stabilize the childcare industry due to COVID. Some of you have lost children. Some of you don't even have children right now. So it's just it's an extra revenue to keep you afloat. We are recommending again and again for you to read the grant agreement. It's your Bible. That's definitely what's going to help you understand how the grant should be used and what's required when it comes to reporting. It must be spent on items which sustained the childcare business. Again, ask yourself this question: will the daycare have purchased or incurred this cost if the business was not in a daycare business? If the answer is no, then that cost is not allowable, which basically might mean you might have to pay back that money to DCYF someday. What can the funds be used for? Obviously, it can be used for a program amount, an add-on amount, which basically is if the program cannot cover it, the add-on can cover it. Workforce amount, specifically for employee raises, recruitment, bonuses, and retention activities. One thing I wanted to kind of provide here is there is a guide here. I'm not going to click it right now because I'm on live, This guide actually, if you click it, it gives you all the possible examples of the type of expenses that you can use the grant for. So when we send this slides tonight, and you want to know more about the type of cost, just go ahead and click this link, and it will give you the PDF version of all the possible expenses. Please note that it's not inclusive. There are expenses outside of that that are still eligible. We also talked about business versus personal expenses. Remember, the IRS allows what's considered ordinary and necessary expenses. The IRS disallows what's considered personal living or family expenses. And DCYF exactly follows the same guideline too as well. Actually, today I had a client at my office that was asking me about this. And one of the questions was, can I change the beds, in our house? And I said, give me more information. And he says, like, our full bed, queen bed and stuff. And I said, well, do the daycare utilize the queen and the full size bed? And says, no. And I say, well, obviously then you can't. That's your own personal living. However, if you have a bassinets for the children, then yes, you can buy bassinets or upgrade the bassinets, or small, tiny beds, with like I have a one for my son. I think I forgot the Disney video, the Disney movie, my Cars, like, right? He has that bed. If you want to buy those things for the kids, absolutely. Those are considered ordinary and necessary expenses. We talked about budgeting and accounting, obviously. Budgeting aims to predict what will happen financially. It looks forward in time. What will your spending be 6 months from now and a year from now? And accounting deals with financial transactions that have already happened, right? Looks backward. You have to record it. What was my cost for rent, mortgage, utilities, salary, supplies, materials, and etc. Anything that's basically considered a business operating expense that you have paid will be recorded, and the accounting system will record that. If you have an accounting system, that's totally fine too as well, as long as you have a ledger, a manual ledger, or an Excel spreadsheet. That will also be considered an accounting system. We talked about the dangers of not having financial system, and this is really important because when DCYF selects you an audit, they're going to ask you for a detailed transaction, and then the receipts, and then agreements or lease agreements and stuff. So I always say this to any client or potential client: the burden of supplying information is indeed on the taxpayer or the business owner. The responsibility to prove entries, deductions, and statements made on your tax return or the grant application is known as the burden of proof. Generally, taxpayers or business owners meet their burden of proof by having the information and receipts for the expenses that you're claiming. You should keep adequate records to prove your expenses or have sufficient evidence that will support your own statement. You generally must have documentary evidence such as receipts, canceled checks, or bills to support your expenses. Your brain, your memory is not sufficient, just the FYI. Now we're basically going to get into our topic for today, and that is, prepping for audit, physical review, record keeping, and retention. As you can see here, magnifying glass, right? They're trying to figure out what's in there. Is it the right thing that I should be looking for? All right. So how is record keeping or retention important to me or to your business? Record keeping is the fact of keeping track of history of a person's or organization's activities, generally by creating and storing consistent formal records. Record keeping is typically used in the contents of official accounting, especially for business or other organizations. As a small business owner, director, or a site supervisor, you are responsible for the basic finance structure of the business, and that structure also have records. Okay, it's critical you understand the different categories of finance so that you are better aware of the activities, right? So, for example, your records. If you're going to file them, how do you file them? Where do you file the food records? Where do you file the lease records? Where do you file the information, from the children? Are they allergic to some type of a food or medicine and stuff, right? So those are all considered records. You can have financial records and non-financial records, and that can be part of the overall audit or the physical review. So this responsibility includes keeping robust financial receipts and non-financial records, such as client and employee, if you have any employees, of course, right? W-4, ID, Social Security, the right to work in the United States of America. Those are also considered non-financial records. How do you keep records, right? Obviously, financial system storage, right? If you have a QuickBooks, you have the ability to scan and store receipts on the cloud, right? If you don't have that, and we talked about it on our previous session, if you have Google OneDrive, if you have Microsoft's or Hotmail's OneDrive, you can also scan and store receipts there. So on the cloud, you can also actually do it by subscribing to your, I believe, is it the iTunes or the Apple iTunes? You can buy a storage on your Apple phone, scan receipts, and just store them on the iCloud actually, for subscription. And previously, shoebox, right? You have your shoebox at home, and all the receipts that you receive, you just put them there. And if you ever call upon, you can go back and get the receipt. Obviously, you spend a lot of time, because if you are keeping 12 months worth of receipts, how do you know which receipt is the right receipt? So you have to separate them. Oh, this one is January, this one is March, this one is June, but they're looking for August, right? So it will take you time for you to get that receipt. So that's the disadvantage of having a shoebox receipt. The advantage of having an online on the cloud or having financial systems is that you know the specific transaction, you know the date. So you can actually just go there. You know, you have a criteria built in. You select September 17, 2022. Boom, you'll get that transaction. Along came with the attachment of that transaction. And that's what you send to DCYF. So that's three basic ways of keeping your records. Typical records, right? I just provided a few samples here. A cancel check. For those of you who don't know what a cancel check is, it's a check that you wrote and has cleared the bank, and the bank has issued the money to the vendor. So, and now it's considered a canceled check, right? You see the image in your bank statement. Bank statements are also considered records, invoices, receipts, agreements such as leases or contracts between business and third party, such as an attorney or a contract who's remodeling a center or a home. Those are also considered records. There's more records, right? Like records for for your clients, records for your employees can also be considered a typical record. DCYF record retention requirement period is very important that you understand here. So it's a standard practice to actually keep records for 5 years. Typically, when it comes from a tax point of view, it's 3 years. The IRS requires that you keep 3 years worth of records because you can be subject to an audit 3 years from now. But DCYF is saying here that provider must save the receipts for purchases made with these grant funds for 5 years. This bullet point, I literally got that from the PDF from DCYF. So 5 years is what you need to retain the receipts and anything relating to the grant. That means, assume you got the grant in December, as most of you did, and you start using the expenses in 2022. So 2022, 2023, 24, 25, 26. So you must have receipts until 2026 because 2025, you can be selected for an audit for something that you spent 3-4 years ago. So please make sure you have a great way of keeping your receipts and your records, okay? I mentioned about the IRS, which is 3 years. Providers might be asked to submit the receipts to DCYF. If a provider is unable to provide receipts and documentation about requests, they might be required to repay all of the grant funds. Obviously, one of our participants just shared that with us where there was an audit, was determined that, the center or the home provider was overpaid. So now you go ahead and pay back. And hopefully they will give you a payment arrangement where you can pay that in a timely manner. Now, prepping for audit, physical review, notification, response, and follow-up. So you first need to understand what an audit is or a physical review is. They're synonymous, but also different. And an audit is basically an official inspection of an individual's or organization accounts, typically by independent body. So for example, if you're going to go through an audit, right, and that audit is considered a financial statement audit, the organization or the person will hire someone like me who's independent, who's a CPA, who's licensed to practice in the state of Washington, and also can issue an opinion on the financial statements. So typically, that's what an audit is, okay? Physical review is slightly different from an audit. Can we put that person on mute, please? Thank you. So a physical review is typically a review of funds in accordance with the provisions of the law. So DCYF grant requirements read the grant, right? So a physical review will most likely be what you might encounter from DCYF. So what they're doing here is that they're reviewing it specifically. What do you spend on that grant? They're not going to be reviewing what you spent on, money like your typical revenue that you generate. That's not their concern. Their concern is that we gave you an X amount of. Can we put everybody on mute, please? Hello? Okay, thank you. So DCYF they're reviewing the grant, that specific grant. We gave you $75,000. You spent it. We want to know how you spent on that $75,000. So that would be considered a physical review, okay? Please read your grant requirements and visit that link to give you an idea of what's going to be required. This is actually one of my clients. I redacted their name. They got an email. This is typically the notification, right? And I'll read it, the notification. Obviously, it's COVID, so they're not coming to your center or home. So it's through an email notification. And it said here, hello, Abdul Ali. We noticed that you used the spring 2020 COVID grant to pay for your rent, mortgage, or utilities while reviewing your receipts. This grant can only be used to cover the time-space percentage of your space cost and utilities. And we will need to see documentation for this percentage. You can document your time and space percentage by sending us a copy of your most recent federal form 8829 tax form. They're very helpful. They're even telling you this is what you need to send us. Also, only your rental agreement is not enough documentation for your expense. We also need canceled checks and bank statements. So now, the important thing here is that they're asking to make sure that you've actually claimed the expenses on the federal tax return, and that will determine that you did, right? This individual sent rental agreement. That's not only sufficient. They want more than that. They want canceled checks. Why is it canceled check? They want to make sure that what you said you paid is actually have cleared the bank, right? And the bank statement. So a copy of the check and a bank statement and the lease and the 8829. So that's 4 things they need to actually verify rent or space, right? So I was working with this client, and this is actually our answer to the request. Dear COVID grant information, that's actually the email that sent the request. Thank you for your email on January 25th, 2022. Attached, you'll find from 8829, business use of home, lease agreement, copy of checks made payable to landlord or lender, utility statements, because the form 8829 also has utility line, where you have to also claim the utility lines. From Puget Sound, Sioux Creek Water and Sewage. Obviously, if you live in Renton or Kent, that's your water and sewer provider. For the business use of home, you will notice that 45% of total square footage of the home is located to the daycare. Our childcare is open 24 hours, hence space is exclusively used for daycare and no hours required needed on lines 4 and 5 on the business use of home from 8 to 29. Hope this is sufficient. Please let me know if you need additional information. So obviously what you're doing here is that there was a request made, right? This is your response to the request. Only send what's requested of you. Don't send more than that, right? And here, because normally some daycares don't open 24 hours. Some are open 12 hours. Some are open 4 hours. So the home is not exclusively used for daycare. So you must calculate the hours used for this space. And that's why here we're saying that this does not apply to us because the daycare center is open 24 hours. We exclusively use the space for the daycare, regardless whether there are kids or not. It's for the daycare. Okay? So remember to track your expenses, and it's very important. If you're selected for receipt collection and verification, you will need to send DCYF copies of all receipts and documentation on how you spent. Okay? One thing I want to go back is it's here. Obviously, there was a request before this, right? And the client did not share that with me. They tried to address that by themselves. And when they did it, they provided, DCF asked a lot of questions. I think if they would have sought a professional advice, that it would have been simpler, right? Normally, when you're going through an audit, it's you should only focus on what's being asked. And typically, it would be a letter that says, hey, it's DCYF. We're going to be doing a physical review. These are the following things that we might need to ask you. So they're kind of giving you a heads up. We might ask for payroll. We might ask for rent. We might ask for food. They're giving you a heads up what they might need, right? Then they will say, we plan to, this is, by the way, it's actually pre-COVID, okay? And they might say, we plan to be at your site or home on day X. So when they come in day X, they will say, can you please give us payroll for this specific period? Can you give us rent for this specific period? Can you give us this for a specific period? But keep in mind though, when that request came in, they requested some data. So they have that data, and that data, they're going to sample that data. And they have specific transactions that they want to review when they come and do the physical review. That's one thing that I also would like to mention to you guys. So sometimes the physical review can go from being financial to non-financial, right? Obviously, this is a grant. We're talking about money. But sometimes it can be about your other records. If you claim to have employees, do you have the records of your employees, right? The W-4, the Social Security, the right to work in the United States of America, and your children, I keep saying children, like your clients, right? If you said, I provided a tuition waiver or I waived the co-payment and stuff, what forms did you fill in? All this can be part of the physical review, okay? So we're here. So we'd like to now open up some questions that you might have about getting ready for an audit, the notification process, and being selected for an audit. You can unmute yourself.
So I have a question to prevent an audit, possibly.
Adriana, I'm sorry, you had a question, and then I missed the second part.
So I want to try to prevent an audit.
Prevent an audit.
Yeah. So I normally do my own taxes, and this time the forms that were given to me are a 1099 NEC and a 1099 miscellaneous.
Okay. Adriana, do you have a daycare center, or are you a home care provider, or you FFN?
I'm FFN.
Okay. So you're FFN. So you are giving 1099 NEC and 1099 miscellaneous. So
Yes.
you basically received what's considered non-employee compensation. Okay. And you're subject to file a Schedule C with the IRS. And all I can say is that seek professional assistance with your taxes, because you mentioned you used to do your own taxes and you were probably a straight W-2, which is simpler, correct?
Yeah.
So I will definitely recommend that you seek an assistance from a tax professional. And your first question, you said you want to prevent an audit. Nobody can prevent an audit. So it's just you are at the mercy of the agency. You just hope that you're never selected for an audit. But there's no such thing as preventing an audit.
Okay.
No problem, Adriana.
All right. Well, thank you.
You're welcome.
I can help. I think the next person is, I want to say Karen with the C. You want to go ahead?
Yes. I noticed that on that review, it stated that about the time-space percentage. I thought that the last time I was in this class that we could use the money towards 100% of our bills, that it wasn't, we didn't have to only use the time-space percentage for how much we could use the grant money.
Excellent question. No, you heard it right. So I'm actually going back to the slide. This sample that I'm sharing, it's not the funds you received now. It's a different funds that spring 2021 folks received. It was called the COVID grant, spring 2021 COVID grant that DCUF provided. So here, that grant was actually for rent only. So DCUF is saying that you must give as this. But for this grant specifically, DCUF did not say only a percentage can be used. They said rent can be used for this fund. And I remember Iftin actually followed up with them and said, for now, it's okay for 100%. Iftin, is that correct?
Yes, there is no time and percentage on this grant, and it's a free reign for your entire rent or bills.
Yeah. However, though, Karen, when you're going to file your federal taxes next year, right? Because you're in 2022 now. Most likely you get the grant in December and you'll probably start using it this year. So when you do your expense report, and assuming you're individual childcare provider at home, then you have to use the 8829 to do the allocation of space for federal tax purposes only.
So do I claim the money because I did receive the money in December and didn't get to use it, do I claim the money for this year or when I can use it, or do I have to claim it in last year in 2021 before I could even use it?
Excellent question again. Karen, for the purposes of taxes, the entire grant that you received in December of 2021, it's included in your 2021 gross receipts. So obviously, you will be subject to pay more taxes than you used to. But guess what? You can use this grant money to pay that taxes.
The thing is that I had a friend tell me that they took their taxes to a tax preparer. They received $54,000 something dollars and ended up having to pay $30,000 in taxes. That makes me want to just give the money back.
So Karen, here's the thing: that $34,000, that
Or she got around
no, 54. But
54,000.
how much is she
And
paying?
now she's having to pay $30,000
Yeah.
in taxes, because she got all this money all of a sudden at the end of the year.
Yeah.
And didn't have time to spend anything on it. So it makes me feel like, damn, like,
No.
are they just waiting in the backgrounds to take my home because I won't have the money to pay it?
So obviously, Karen, receiving this money puts you in a different tax bracket, right? Keep in mind, before you got this grant, you were also making money, I hope, right? You had a business, your business was making money, you had expenses, you had a profit, and that profit is also subject to taxes. Of course, if that friend didn't receive the $54,000, most likely they wouldn't pay $34,000. They might pay $14,000 or less, right? But this $54,000 put them in a different category. And unfortunately, there's no expenses to offset. So the expenses is being shifted in 2022, but the income is shifted to 2021. So it's unfortunately is what we have right now. And there is no way you can change that right now because you've accepted the money already. And DCYF has already issued a 1099, 1099 NEC or miscellaneous. Even if you return the money right now, I believe DCYF will probably send, they will not adjust your 1099 net correction for 2021.
So I'm doing sort of clarifying question for Karen. Karen, you were operating the entire year, correct?
Yes, but I only had like 3 children most of the time. I didn't have hardly any income.
So then you should be fine because you can go back from January to now and accrue all the expenses and wage losses that you endured and claim that as an expense for 2021 to offset that large tax.
So wage loss, what you're saying, yeah. So the children that left my daycare because of COVID, I could claim them as a loss?
Yeah, so let's say, for example, like because you had less kids, that means you had less income coming in. So you probably didn't pay yourself the any payroll because whatever income was coming in was probably going towards running the business. So if you pay yourself wages and benefits for the entire year, then you can claim that as tax. Does that make sense?
Okay.
Expense,
yes, it
not
does.
tax. Sorry.
Right.
Okay.
Okay.
And we could set up a one-on-one session, Karen, with you to just walk you through it if you need that private one-on-one.
That would be great because my husband is pretty upset. Because he feels like we're ready to retire almost a few more years, and we feel like our house is going to be taken from us because once that money's gone, we won't have the money to pay all those $30,000 or more dollars in taxes. They'll just take our home.
And I hope that doesn't happen, Karen's, and be hopeful that there's a solution to that. All right, let's move on to the next question. Abdul, if that's okay with you. Jill?
Hi.
Hi.
Hi, Jill.
Can you hear me?
We can hear you.
Yes.
Okay, so is the 8829, is that just for home daycare?
Yes, it is for home daycare.
So as far as my staff goes for my bonuses, I have their W-4s, I have copies of their social security cards, driver's license, and I filled out an eligibility sheet. That's enough for that, right? And I'll have the canceled checks and bank statements.
Yes.
Okay. Now, as far as rent goes, I do not have a lease agreement. It was just month to month. But I have the canceled checks, bank statements, and I also have handwritten receipts from the owner that he signed that shows each month, check number, all that kind of stuff. Is that okay?
That's also okay, Jill.
Okay. And as far as the families that I wrote forgiveness for, I just wrote a sheet that said parent's name, child's name, what the amount was, the dates, then I had them sign it.
That's also considered sufficient.
Okay. And then my last question is, the gal who was helping us last week, I lost the phone number for me to ask questions to call.
Okay. We will resend it in the chat box. Sahra and Muhammad, if you could resend the phone and the email would be nice.
Thank you so much.
You're welcome. It sounds like you're doing great work. Keep up
Thank
the
you.
good job. All right, the next person is Deborah. Hey, Deborah?
Yes, I'm here. Can you
Good to
hear
have you,
me?
Deborah. Yes.
Oh, I'm so excited that I figured out how to raise my hand. Okay. I want to make sure I understand this properly. I can make it retroactive, whatever I spent in 2021. So I forgave some tuition. I've been doing the W-10s last night, and I forgave some tuition. So it's a pretty big chunk. And I know now from that other lady what to do to prove that. But it's only going to affect showing the grant that I spent the money as allowed, right? I'm still going to be taxed on that portion of the money because I didn't really receive it. Am I correct? Or do you understand my question?
Deborah, I understand you. And I want to make sure that I divide your question to two parts. Okay? One is from federal tax point of view. Obviously, everything we do here has tax consequences. And one is the allowable expenses on DCYF. So
Right.
I'm going to talk about the simple one first, which is the DCYF portion. And Iftin, help me here if I miss anything, okay? Yes, you can reimburse yourself for co-payments or tuitions that you waived in 2021. You can actually reimburse yourself. You can do that, okay? That's one. And by the way, the tuition and the co-pays that you forgive for your clients is actually considered a business deduction. Think of it as a refund or a return, right? Let's just use for simple math. You made $100,000, right, from your, from your clients, but you could have made $200,000, right? So obviously, you'll have to increase it to 200,000 and then minus the 100,000, right? Because it will show as a return or allowance. Or you can have at the bottom called tuition waiver under Schedule C under the other expenses. So yes, you can do that as well. But keep in mind though, you cannot deduct from the federal point of view something that didn't take place, right? You
Right,
cannot
I understand that. My
okay.
tax guy has always told me, parent disappears, owes me $900. I can't write that down as a loss. It's a loss. That's all it is.
Yeah.
You can't claim a loss as a deduction.
Exactly. But
Right.
it's considered a bad debt, right?
Right.
It's a bad debt. But if you had a financial statement, you can report that on your financial statement, but not on the tax return. So I want folks to understand here, just because you lost revenue, you cannot say I lost revenue, IRS. Therefore, I want to use the lost revenue as a deduction. You cannot do that.
Right. I understand that.
So
let's say that my tuition forgiveness is $24,000.
yes.
My grant is $74,000. So I'm already down to $50,000 that I have to prove to the grant, the grant people that I've spent. correct?
Yes. Remember though, you still gonna have that paper, right, trail for the 24,000.
Right.
Okay, perfect. Great. Continue, please.
That was it. It's easy to make the paper trail.
Perfect.
So, okay, thank you.
No problem, Deborah. Glad you understand. Who's next, Iftin?
The next person is Sama.
Hi guys, let me put my hand down. I have two questions. One, if I only had this daycare for 6 months, do I have to use only for that 6 months? And the second question is, okay, hold on. And the second question is, do I have to spend the whole 50,000 just that last year, or I can continue it for next year?
So it doesn't matter if you are in business 6 months or 6 year. The grant allows you to spend all the money within 12 months. So it doesn't say 11 months or 10 months. Just gives you 12 months from the day you receive the money. So if you got the money on December 26, 2021, you should spend the funds by December 26 or 25, 2022. I believe that's, I think I answered both your questions, Sama. If I didn't, let me know.
There's something in there that I didn't quite get it. One of the ladies actually asked and said, can I, if I have to, let's say, do a tax right now, I cannot say something that I haven't spent, that I'm going to spend, or I should have spent, right?
Exactly. You can only, from the tax point of view, deduct what you spent in 2021. You cannot deduct something that you're going to do in 2022 on a 2021
Okay,
return.
and this includes the first 6 months that I wasn't even licensed.
So the first 6 months you were not licensed, did you spend any expenses?
Yes, that's I purposely got this place for the business. I rented it, I renovated it, I get it inspected, I set it up, I got everything passed, and then it started. So the whole year from the beginning till now, it was the purpose of the business.
Yeah. So you're waiting for 6 months to be licensed, right? Am I right?
Yes.
Okay.
Yes.
So
5 months.
I hope I don't confuse you, but so I'm a finance guy, so I have to kind of talk in finance terms. So the first 6 months of your business, all that expense is considered a startup cost. Basically mean,
Absolutely.
so a startup cost, you cannot typically deduct all of it at one time. You have to amortize it over 5 years, which is total of 6 months, right? So the remodeling cost, the paint, the fence and stuff, you have to add all of it in and amortize it over 5 years, because tax deduction only works. When I say tax deduction, I'm talking about full tax deduction starts the day you open the door for your business, right? And the day you open the door for your business is the day you got licensed, right? If you are not licensed, then you can't have a client in, and you cannot generate revenue. So I hope I answered some of your question. So
Yeah,
6
that was
months,
good.
6
Thank
months,
you.
6 months prior, it's you have to amortize it. I don't know Iftin, because she was not licensed the first 6 months. Can she go back and reimburse some of those expenses?
There's a couple of stipulation, right?
Okay.
One is, did you have a Washington State business license, even though you didn't have a childcare business license?
Yes.
Did you have a bank account? Because at the end of the day, your business, the bank account statement will show the transactions of your business. And then if the answer is yes to those questions, then you may go back for startup cost for your business.
Thank you, Iftin.
Thank you.
So, Sama, did we answer your questions correctly the way you
Yes,
expected?
bro. Yes.
Okay.
Yes, Abdul. You did. Thank you. Thank you very much.
All right, thank you, Sama. The next question is coming from Cobra. Did I say it right? I'm butchering people's name. I apologize in advance.
Yes, you said it correctly.
Okay.
I had two questions. So I'm just confirming because I didn't really understand. So is the whole grant taxable or just like a certain portion of it?
Copra, the whole grant is taxable to you and is included in your 1099 NEC if you receive the
Okay.
money in 2021.
Okay, because I haven't received mine yet, so it would go on my next year's taxes, right?
Oh, you haven't got the grant yet, right?
No.
Good for you. Whew. You dodged the bullet. I'm joking, but what I mean when I really mean when I say good for you, that means you don't have to deal with the tax headache that money was gonna bring. However, though, the good news is that once you receive it now in 2022, you have expenses to write off against that grant, and as long as you don't have, I mean, I hope you get kids, right? The objective is to have clients, right? So
Yes.
I hope you generate revenue, but in the event that you don't generate revenue, then it's going to be more of a wash for you because you have 74,000 and you have rent and you have utilities and you paid yourself. So all this will be a legitimate expenses to deduct. So your tax burden will be lower versus someone who received the entire grant and was also making additional revenue.
Okay, got it. And then my other question is, I know how the workforce amount and everything works, but what can you spend the add-ons on?
So the add-ons is anything that the program amount couldn't cover. Iftin, is that correct?
Yes, operation costs, whatever your business is incurring.
Yes.
Okay, so you can't use that like for payroll and stuff, or?
You can, so that's considered operation. So payroll, benefits, classroom supplies, rent, mortgage, utility, whatever the business is, the expense of the business, you can use the add-on on the program amount.
Okay.
You can't use it.
Thank
You cannot use it for bonus, retention, and salary increases. Correct, Iftin?
Retention activities, it depends what type of retention. So
Okay.
they can retention if you're doing like 401k or you're doing benefit like medical, dental, then you can,
Okay.
but not for bonuses. Yes. All right.
Okay.
Thank you.
Wait, so you said, sorry, I just wanted to confirm. So you said we could use it for payroll, but not for bonuses, right? The add-ons?
The program amount and add-ons are 1 unit, so just program expense. Yes.
Okay, sounds good. Thank you.
You're welcome.
Is that included toys also?
Yes. Was that Lori?
No.
Yes, ma'am.
Oh, yes, ma'am. Yes, you can buy any classroom materials that you need. Lori's the next person, so go ahead, unmute yourself and ask your question.
Okay, if because I haven't gotten my grant yet either. So if I end up in a different tax bracket, I know I can use the monies and try to, all the deductibles. If I end up in a different tax bracket than in 2022, then will my tax bracket go back down in 2023 since I won't have the grant in 2023? It'll be spent already. Will my taxes go back down to what maybe they were previously, depending on how much income I made?
Yes. Was it Lori, that person?
Yes.
Yes, Lori, you're right. Your tax bracket will go up because of this grant, right? And then it will hopefully go down because the grant will not be a factor in 2023.
Yes, and then because I haven't gotten it yet, I don't use any of this for 2021.
Yes.
To go back.
Yeah. So I was going to add, for those of you who haven't got the grant yet right now, just have some tax planning, right? If you get the full amount of grant, and remember, the grant allows you to pay taxes. So one thing you can actually do is you're not going to know what your tax liability is going to be until probably January 2023 to April 2023. What you can actually do is you can do estimated tax payments because you know you're going to pay. So do estimated payments by April 15, 2022, by July 15, 2022, October 15, 2022. Why? Because you're going to get the grant, say, this month or next month. And remember, you have a year to spend, right? And that year might be, the fiscal year might end in February of 2023. So you want to make sure that you have covered the potential tax liability by making estimated tax payments. Typically, if you are a family childcare provider and you're a sole proprietor or you're a single member LLC who has not elected to be treated as a S corp, typically your self-employment tax rate. I'm only talking about the self-employment portion, okay, not the entire income tax, right? It's about 15.3%. Just to be safe, I'll probably just say, set aside or make estimated payments of a 20% of your of what you think of 20%. Just add 5% more just to be safe. So for example, if you are giving yourself, say, $5,000 of a salary or owner withdraw, then put aside 15.3 to 20% and make those estimated payments to the IRS. Obviously, the other expenses are tax deductible, right? The rent, the food and stuff. But the $5,000, it's not deductible because it's considered a profit, right? You're paying yourself, it's a profit. So I hope, Lori, I provided you extra information than you requested.
Yes, I do use HR Block, and they're giving me quarterly packets so I can pay, and I will talk to them about how much I should be having my quarterlies go cover the grant monies. But because I haven't gotten it yet, hopefully I get it before, because I don't know exactly how much I'm getting. So hopefully I get it before I go to my taxes done.
And in this case, then, wait until probably if you haven't gotten it, I'm sure you're going to get it. Wait until late February, early March. So by then you'll have an idea of what your projection might be.
And the other question is, there's two other providers that live in my area, and they had contacted me and texted me and asked me if there's any way I could send them the link to this tonight, or if I can record it, or how do I get them to see this?
I believe we have your email, and you should be getting this link, and then you can forward it to them.
Okay.
No problem. Is that all, Lori?
Yes, thank you.
Who's next?
Lori, the session is also recorded, and we will send it to you in an email, and you can forward it to them as well. We're going to have another Q&A session next week on Wednesday. Instead of talking about audits, we will have an opportunity where they can come in and ask questions. I do want to announce to folks there were some providers who received an amount in the bank, but when they got their tax paper, it said a different number. If your tax paper does not match what you received in your bank account, please email DCYF and let them know there's a discrepancy between the tax paper and the bank deposit. Either they owe you money or they need to correct the tax paper. So make sure you guys review the documentation and compare it to the actual amount you received.
And Eftin, just to share, I have seen a corrected 1099 from DCYF.
Yes.
It happens.
Yeah, it happens. Okay. So the next person is Noel. I want to say Noel, but I could be saying it wrong.
Oh no, you did beautifully. Thank you.
Oh,
I'm new here tonight, so I haven't heard everything. And I'm just going to be really brief on what I'm asking. family childcare and other family childcare providers said that they deposited it and gave themselves the whole entire amount as a bonus. Is that legit? And then they said, oh no, I just paid myself as a bonus and now I can spend it however I want.
How
Iftin,
much
I
of
will,
it are we
I will let
talking
you.
about?
Yeah, Iftin, I'll let you answer that question.
Well, I'm gonna say it was like, let's say 25,000.
Oh, no, that's not all right. No.
Well, I'm glad I asked. No, literally,
Yeah.
it's the talk at the park. We all are able to take our kids to the park, and there's like 4 or 5 providers that come, and they're saying, yeah, no, literally giving it to themselves as a bonus. The one gal, she's building a really super fancy gate, which could be used childcare, but anyhow, she's doing a gate, and she goes, "Oh no, I just gave it all to myself."
So there's couple of things. One, the workforce dollar. The workforce dollar allows you to give yourself a bonus. Now, if you're a family childcare, that workforce dollar is only $9,000. Now, if you have a staff that you have an employee, then you would have to give them a bonus as well, and you cannot take all the bonus for yourself. Now, the program amount is you can write yourself a check as a payroll, and you can either if you lost income for 2021, then you document the lost income of 2021 and claim all the hours that you worked, making sure you have your timesheet, your payroll record, and you can pay yourself a nice fat check at the end of the year and make that as a deductible expense out of the large income. But no, you cannot give yourself $25,000 bonus because you're just an awesome person and you deserve it.
Well, it's true. Okay, I'm so much more, I just couldn't do it without, talking to somebody because it just doesn't seem, anyhow, thank you.
You're welcome.
The other thing,
Go ahead.
I was gonna just say is that for mine, when I got it, the first thing I did was I added to my quarterlies. I may not have added enough, but that was the first thing. And then I'm kind of going to sit on it until I do my taxes and see what else I have. And I'm going to get hit in 21, but 22, then I'll have more write-offs.
Yes.
So that's kind of, so for the woman that was concerned about her house, it's like, that's how I was doing it, is that, yeah, I'm going to get hit now, but then I'm going to spend it all next year.
Yes.
And that should balance it out.
You will have more expenses in 2022 calendar than 2021, yes. But you will have
yes.
more gross in 2020. You have a less gross in 2022. Noel, yes. You hit it. You hit it right.
Yeah, I'm hoping it works out. Because it is. It's hard to receive that money and then send it off. But yes. What I'm not sending off, I get. So thank you for the explanation. So is the portions, like the workforce portion and the program amount, is that on the receipt that came along with the check? Does it give you those amounts?
No, you should have received an email that says the amount of the workforce dollar and the amount of the program dollar.
Okay, I never got that, but I will contact DC what I just got. Yeah, no, anyhow, enough of that. Thank you so much. You guys are really,
you're welcome.
Just the little bit I've had of you has been very helpful.
The next person
I have a quick
is Jessica. Jessica, do you want to unmute yourself?
Hello, can you hear me?
Hello. Yes.
Yes, I have a few questions. The first one is when we use the money from the grant to refund from the year 2021. But for example, I received my license back on May 2021, and I didn't have students until September of 2021. If I wanted to refund the rent that I paid for because I didn't have an income, how could I do that? Since I deposited the grant to the business account, like I cannot do any transaction because the money is there. Should I just write a document stating that, or how can I do that?
So a couple questions.
Yes.
Do you pay your rent from an invoice? Do you get like a monthly invoice?
No. So actually, the homeowner, I was living in there in one of the rooms, but then both of us decided to create this home daycare, and the both of us were living there. So we turned the home into the daycare. So all of the space was the environment. We set it up for daycare, like the whole living room. Everything is for the daycare, but we didn't get students until September. But the business was paying my associate the rent.
Okay, so the way I'm understanding you is you guys opened the business in May, but you didn't have kids until September. So there's a gap of four months that you paid out of pocket rent, right?
Yes.
Now you can pay yourself back, but you will need to show documentation for the rent that you paid from May to September.
So the thing is, for example, when we started the business, both of us opened a business account and just made an investment. For example, on the name of the business, because that's where we the money that we invested and opened the business account. That's where we took the money for the rent and for some of the furniture and all the things that we needed to have the environment setting ready for the children. So the money came out from the business account, not like from my personal pocket. I don't know if you understand what I'm trying to say.
Did the business get a loan?
No. Both of us, for example, she had like 10,000 and I had another 10,000 that we, from our pocket, from our personal savings account. So we opened the business account, deposited like our investment, our personal investment. You know, she put down 10,000 and I put 10,000. You know, so that's how we opened the.
I think I understand you. So you paid your personal dollars, $10,000. Can you hear me?
Can you hear me? Oh, okay.
Yeah, you're breaking up. Abdul, can you hear me?
I can hear you, yes.
Okay. So if I understand it correctly, you used your personal dollars to supplement the bill.
Yes, I can hear you.
Okay. So you used your personal dollars to supplement the income for the business, correct?
Yes.
Okay. Then you just need to show a receipt, and you can reimburse yourself for whatever income that you put in.
Iftin, you also mentioned, I think a similar question was asked. You also mentioned, did you have a UPI and did you have a business bank account, correct? Before the license.
Since the beginning, we had the business account, and again, both of us got together and we just opened up the business account, invested each one of us 10,000 into the business account to start, and then from the business account, all the all the purchases that we made for the environment, and then we paid the rent and all that. All that money came from the business account.
Yeah.
So what I'm trying to think right now is, okay, if I want to reimburse myself or do a refund, not to me personally, but to that business account. For example, if I paid for September and October, I paid the rent. How could I refund that from the grant to the business account? Not personally to me, you know? How could I show that?
So you actually can't, right? So if the
Okay.
business had money, if the
Uh-huh.
business had money, then it did its job and it paid its bill. Now, if you personally loaned the business money and and to pay for like toys and the rent and the whatever renovation you guys did, then the business owes you money, so you can reimburse yourself that $10,000. Now, if you want to take that $10,000 and put in your savings account, great. But if you want to donate it back to the business, then you can as well.
Okay, so what you're trying to say, for example, the 10,000 that I put down to have that budget to open the business, I could get those 10,000 back from the grant.
Can I say something, Iftin?
Yes.
So Jessica, help me. The $10,000 was the initial investment, right?
Yes.
CCSG grant, it's not to reimburse for your investment. It's to help
Yes.
stabilize your business. And I want to add something additional here. It's great that DCYF allows you to reimburse for operating costs. The key word is operating cost, not investment, operating cost, okay?
Okay.
It's great that DCYF allows you to reimburse yourself. But keep in mind, you can reimburse yourself right now, use the money for personal things, right? Which is legitimate because you reimburse yourself. Something can happen to you between now and December of 2022, right? So think wisely, think ahead, right? COVID hasn't left us yet. It can come back. We can have another closure and stuff. You can lose the kids you have right now, right? So it's really important and it's really great for your business to keep that money in the bank and use it slowly throughout the year, right? Pay your rent, pay the food, pay the utility. If you have no kids, pay yourself a decent salary and use that throughout the year. Yes, if your business was in the red in 2021, you can go back and reimburse yourself. But you know what's going to happen? That reimbursement, it's your own money. You do it whatever you want to do with it. But what if something happens in 2022? Again, you'll be in the red. Now, how will you cover that as well? Something just to think about, okay? Besides the reimbursement. That's just an advice I'm giving to everybody who's here.
Yes, I understand what you were saying, and that was not like my intention.
No. Just I'm sorry. I didn't want you to think. I was giving a general overview of about.
Oh, yes.
Yeah.
But I'm
So
just
don't
trying,
give me. Yeah.
to figure out because I know COVID is just started. It's still going around and everything. But since I don't know, I'm afraid like I'm not gonna be able to spend like the 54,000 within a year. So I'm just trying to figure out what's the best day to use that money, you know, like wisely to make it like, okay, I use this money in this and this and this, you know. I don't want to spend it, you know. And
But you can, you can use it for your rent, your payroll. $54,000 is not a lot unless you have other money coming in. And you could just put your documents in order and just count down. Now, maybe instead of saying investment for $10,000, that's an expense that you incurred. Now, if that expense, if the business was not making money, and you were spending money, then that means the business was on a deficit. So just keep your record, and you should be fine. Okay. It's 7:15, and I want to be very mindful of everyone that's waiting on the line. The next person that is next is Umi.
Hello. My question is, can I hire
Omi, we didn't hear you well, so there is some background noise. Start your question again.
So the question is, can I hire someone under 1099 and use the grant money to pay for the assistant, the one that I will hire?
Umi, you cannot pay an employee 1099.
Okay.
You
So
can pay
it's
them a W-2.
So W2.
W2. Okay. Okay, thank you.
No problem.
Yes. And yes, you can hire and pay them payroll.
Thank you, Iftin.
But what about if that employee is only part-time employee, not a full-time, under 30 hours?
It doesn't matter if it's a part-time or full-time, it's an employee, you still pay the payroll. Sinai, did I say it right?
Yes, hi, how are you?
Hi, Sinai, I'm doing good, how are you?
I'm good. I just have a question about, you guys talking about the rent, but about the mortgage, how do I document, how do I,
Rent and mortgage are the same process, just keep your invoice payments, okay?
well, should I write down the receipt? Or what should I do? I'm just a little bit confused now.
How do you make your mortgage payments now?
Well, we pay with my husband half.
How much? How do you pay? Do you pay automatically? Do you cut a check? How do you pay?
Oh, I pay cash my husband always.
Okay. If it's a cash, Abdiwali, it's hard to document cash.
Yeah. So I think for the purpose of this grant, and this is to benefit you, Sanai, is that instead of paying your husband cash, the mortgage should come from the bank fully, and then you and your husband can deal together later and pay yourself what a portion is. But the full amount needs to come from a bank account, a business account, in order to be deductible. And then you can save the mortgage statement as a receipt. Mortgage statement, bank statement should be sufficient for the rent for the mortgage. You and your husband can deal outside together how to reimburse yourself on a cash and stuff.
I love that. Okay, the next person is Farnaz, who was very patient. Farnaz, go ahead, ask a question.
Yes, hi. Yeah, I'm still confused about last year's expenses, like 100% of mortgage payment, 100% utility payments. I mean, I just wanted to know if I still should write a check from the grant to show that I paid my mortgages for whole 2021.
Okay.
Farhaz,
I have a question.
I was gonna say,
Go ahead.
Farhaz, if you're not making money in 2021 and you're fully operating yourself, yes, you can reimburse yourself. Is that right, Iftin?
I had 5 kids. I mean,
Okay.
half of the year I had 4 kids and then 5 kids. So
Farnaz, when you pay your rent, do you use the business account or your personal account?
for mortgage, I paid my daycare account, business account.
So if the business was making mortgage payment, then you cannot reimburse yourself. But if you used your own personal money to spend on the business, then the business owes you money. Then the business has to reimburse you out of the grant money. Does that make sense?
No, I'm still. So I mean, so that means people who did not make any money, that means the daycare was closed, then they can use that for their mortgage.
So if your daycare was closed and you didn't have income coming in, then yes, you can, and you owe rent. You still owe rent. You still owe utility. You can then pay off your bills that you still owe. But if your business does not owe a rent or utility, then you can't pay with this grant, and you just need to moving forward, use your money for rent and utility.
So for year 2022, I can pay for 100% of mortgage and utilities. Is that right?
Yes.
But
yes.
if work or not. I mean, if I have daycare running or not.
It doesn't matter. So you could use your grant money to pay the rent, the utility, the garbage, the gas, the internet, the phone, whatever expense the business is going through for 2022, use your grant money. You can put your other money in your savings.
Okay, but in order to go back to last year's, I have to.
Farhaz, can I help? I think, and this is not Farhaz. It's
anything
for
on that because I had 5 kids.
Yeah. So can I say something? And this is not only for Farhaz; it's for everybody. Okay, it's very important to understand. For once, let's not even talk about the grant. For once, okay. Just think of your business the way it was pre-COVID. For example, right? Pre-COVID, most likely you were making money, right? You were making money, you had a profit. You didn't need grant or any assistance, okay? COVID happened. I want to go back to the slide here. I think, give me one sec here. It's very important to understand what the grant is, okay? It helped to stabilize childcare providers' operations in order to continue to provide a childcare. Goal is to provide financial relief to childcare providers to help defray unexpected business costs associated with the pandemic. For example, what's unexpected business costs associated with the pandemic? Gloves, COVID supplies, separating kids from maybe removing a wall and stuff. Those are unexpected expenses. The last bullet says help to stabilize childcare providers' operations in order to continue to provide childcare. So, for example, you had 12 kids, right? Which is the maximum probably you could have had that time. You were at full gear. You were making money. All of a sudden, COVID happened. You go from 12 to 5 to 3 to 0, right? So now you're in the red. You're minus. You still got to pay rent or mortgage. The door is open, but there's no kids coming in. You got to pay yourself, but there's no money coming in. That's red. You're in the minus. Then you can go back and reimburse yourself those months that you were in the red. But if you were making money in 2021, you can't go back and say, well, I got a grant now, let me reimburse myself. Does that make sense?
Oh, and so I only use that mortgage amount that I couldn't pay, and I put delay on it because we had to do it for 2 months. And then I also can use that for one of the kids that I lost because of COVID.
Yes.
Okay, so then how many tuition I count for that kids that I lost? I only lost 1 kid.
Then
so
then the tuition for the kid, yes.
Okay, so like for 1 month payment, or do for example, if I lost that kid on month of May, do I pay back to myself month of May, June, July, like that until end of the year, or just 1 month?
You see, these two did not say 1 month or 3 months or 4 months. It just say tuition waiver. So that's something that you can Voice of Tomorrow can help you figure out the answer. Iftin, can we take that down? It's a very important question.
Yeah, so I think Farnaz, why don't you take down the phone number that's on the chat box and then give us a call so we could do one-on-one consultation.
Thank you so much.
Yes, please.
But I hope I provided kind of a good example of when you can reimburse yourself, right? And when you cannot reimburse yourself. If you're making money before the grant, then you there's no way to stabilize. You know, you're making money, and there's no unexpected expenses.
All right, for the sake of everyone else, we'll move on. The next person is Lydia. Lydia, do you want to unmute yourself? There you go.
I just have I had the same question with her, like the first lady that she was, but I need like a little clarification. I just opened in June and I only have one child. So when you say you can do like mortgage, do we pay like 100% of our mortgage into like do we reimburse all or like half or some amount?
Abdul, so question, when we say 100% of your mortgage, we're not saying you could pay off a large sum of your mortgage.
No, like the every month, like
So,
my mortgage,
yes.
like every month, do I do like, mine is like 2,100, so do I do like the 2,000 or I just
do it all, 2,100.
Thank you so much. Yeah. Okay. One more question. And I wasn't gonna, I am not doing this, but my friends like said like they listen into like one guy like name like Tom Campbell. He said, I don't know if I spelled his name correctly. He said that you can just pay yourself the whole amount and just spend it like whatever you want. So is that means like, was he saying not correctly? Like I have a lot of friends that are like
you could pay, Tom Copeland. So you could pay yourself rent, payroll. I think that's what he was referring to.
But
okay.
He didn't say like the whole amount, the whole rent.
So you could pay yourself payroll every month. At the end of the year, you could use the entire money for payroll only. But you can't take one large fat check of $75,000 and call it payroll.
Yeah, I think they misunderstood him. So I just wanted to explain to them. Thank you so much. Yeah.
You're welcome. The next person is Lori.
Yes. What about property taxes?
Yes, you can deduct.
Oh, good. Yes, because learn how to hit your just like many of everybody else. And then if I get the grant and I put it into my business account and I want to pay myself a salary, what kind of wording do I need on, say, document that I'm paying myself or to
payroll?
On the memo, you can put it there. And then, like Iftin said, payroll, then put -owner.
/owner. Okay, yeah, because I'm by myself. And then, so how, is there an amount that's suggested for payroll, or do you go by how many children that I don't have here that I should have here, or?
Iftin, please.
Lori, how much? And this is a private question, but how much do you currently pay yourself as a payroll, or how much have you been paying yourself? That's the amount that you need to pay yourself.
Okay.
Now, if you want to give yourself a nice raise because you're so awesome and you deserve it, then you can. There is no stipulation of how much you can pay yourself per month. You just can't go overboard and pay yourself $65,000 a month.
Okay, but I can say something, maybe not 65,000, but take that and break it into the 12 months that I've gotten the grant.
I've been telling folks, try to pay yourself what would be considered a reasonable compensation in someone who's living in King County. King County is a very expensive county, obviously. $2,000 might not be enough for someone to live off, right? But something that's considered a sufficient, reasonable compensation.
Yes.
Okay, and then, I think that was my last question. Pre-taxes, that's very good, no. Now, I can also do my, H&R Block, I can pay that service, and I can pay my quarterly, you said.
Yes, it's considered bookkeeping services.
Okay, great, thank you very much.
You're welcome. Don't forget, everyone, keep your receipts, whatever transaction you're using. All right, then 2 more questions, I believe, and then we might be off the hook. You never know, Abdulali. The next question is coming from, I'm going to butcher this name, Kamen Chanak. Correct me if I know I did it wrong.
I've been in US for 10 years, and you're the first one pronounced my name correct.
Whoa!
Yes, okay, guys. My name is Kamanchano, but the lady before, she just answered my question. So thank you so much.
You're welcome. The next question is coming from Shazia. Did I say it right? Shazia.
Yeah, I'm muting.
There you go. I think your internet is cutting off, hon. Go ahead, ask your question. Okay, we'll come back to Shazia. Who did I not get? I think that was it. Shazia might be the last one. Now, Cobra.
Oh, it's my turn.
Excuse me. Yes, we can hear you. Go ahead.
You hear me? I have a question. I'm a little confused here. Or you should say a lot confused. And the amount that we have to pay for taxes, why should we pay taxes on the whole amount that we receive instead of just paying the amount that is for payroll amount? We have to pay the taxes on the whole loan.
Can I take this,
Yes.
please?
Go ahead.
So, I'm sorry. Was it Asab? Was it Butler? The name that was talking, or
Bertha.
Bertha? Sorry, Bertha. So Bertha, I have to go back here. This is section 162, okay, of the IRS. Sorry to say this. There's a section called section 61 of the IRS. This is something that DCYF didn't do. You didn't do it. Uncle Sam came with that definition. Section 61 says, gross receipts and income shall be included any amount you receive unless it's exempt. Unfortunately, the grant you receive is not exempt from it. It's a compensation, you received it, and you're subject to income tax and self-employment tax. That is really the best answer I can give you. And you cannot just pay tax on that grant. You have to pay taxes on your entire income, including the non-grant money you made from your daycare, minus the expenses. Whatever is left is what's subject to self-employment tax and income tax, including the money you received, because of that rule under section 61. It's the only answer I can give you. Nothing else, nothing less.
Okay, thank you.
No problem.
You're welcome. You're not alone on this one, Bertha. Uncle Sam's coming after everybody.
Yeah,
All
no
right,
kidding. Thank you.
Is there any other person who has a question that wants to come out of the mute and ask?
Can you hear me?
Tammy, yes, we can hear you.
Oh, thanks. So I think Abdullah just answered it. I just want clarification. So if we write ourselves a payroll owner check, and we are going through a payroll service to do so, they would take out the taxes, unemployment or whatever, is necessary. Is that right? Or do we just write ourselves a personal check without the additional deductions?
So Tammy, both of your questions is a yes. If you're
Okay.
going to a payroll provider, that payroll provider obviously is gonna withhold Social Security, Medicare, LNI, and ESD, and paid family leave, right? That's one.
Yes.
If you're going to a payroll provider. If you're not gonna go through a payroll provider and you're the only one who is technically, you're the owner and the employee, you don't have to do that. You can pay yourself, for example, $5,000, and you don't take taxes. But keep in mind though, Tammy, when you're filing your taxes in 2023, that $5,000 times 12, for example, $60,000, that 60 is your profit at the bottom, right? That 60 will be subject to the self-employment tax and the income tax.
Gotcha.
Yeah.
Okay.
But don't forget to do estimated tax payments in April, July, and October so that you're not hit with a large tax bill when it comes to
Yes, for
April
sure.
2023.
Perfect. Now, one other quick question. Would you please rattle off that phone number for you so that I could write it down? I only got half of it and it disappeared on me.
On the chat box?
Yes.
Which phone number?
To reach you.
Me as a CPA or as a voice of
Yes,
tomorrow?
you as a CPA.
Okay. So my phone number, it's 206
Yes.
849 1390. Iftin, can you type on the chat box www.myfirstname.abdiwali.cpa.com? That's also my website, and it has information on the services I provide. There is an inquiry section. You can put your name, phone number, and an email. And if you have questions, you can also send me through there as well.
Perfect. I just got it. Thank you so much, both of you, all of you.
You are so welcome. All right, everyone, it is 7:38. We can take one or two more questions.
Can I say something?
Yes, Lori.
I just wanted to tell you that today I had to contact my caseworker with DCYF. And she was asking me if I had received the grant, and I told her what happened with my grant. And that, yes, I finally did receive my grant. But she was unfamiliar with your set of classes. So I gave her information on your set of classes and how she could, go in herself. She said I told her you're very informative. I gave you guys a really high rating because you guys are very awesome. And I, as a friend, family, and neighbor, I really appreciate you, even though a lot of this stuff doesn't really pertain to me because I am a friend's family and neighbor. I really wanted you to know that I really enjoyed these classes.
Oh, thank you, Lori.
Well, thank you. And you guys, if you feel the same way, go into our Google review and leave a nice raving Google review for Voices of Tomorrow. We appreciate you guys. Again, we're here together. We're here to answer as much questions as possible, support you in whatever one-on-one support you need. We are planning to make sure that you don't pay a dime back. Unless Uncle Sam is coming after you, that we can't help with Uncle Sam. For as far as DCYF, we're here to support because you need it as much as you do. Yes, go ahead, Abdul.
Iftin, can I share my corny joke I just told you before the meeting? Or that's too corny?
No, 2022 is not about corny. We're too rich for your corny jokes.
I have to share this. Please allow me. I think people need to laugh because, they're worried about it, right? So today, someone said, you are an idiot and a patriot if you pay taxes. It's oxymoron, isn't it? Right? You're an idiot and a patriot if you pay taxes. They did not laugh. They didn't get the joke.
Yeah, we got the joke,
Okay.
but we're still upset about the fact that we have to pay taxes.
So I hope that accounts are not known for being funny, but I thought that was funny to me. So never mind. I gave up.
Can I ask a quick question? Because you mentioned not wanting us to pay back.
Mm-hmm.
If we end up having to pay back, is it a deduction?
Yes.
Thank you.
If you have to pay back, then that's a deduction.
So you could write it off as an expense.
Yes.
Thank you.
You're welcome. But let's hope they
Can you hear me?
go ahead, yes.
Actually, this is Nadine saying for Shazia. I have 3 questions. One is, can you hear me?
Yes, we can hear you.
In 2021, she did discount or she cut down her rates for the parents. So we asked each parent to give us a written thing that how much she gave them a kind of discount. So can we use that one as a deduction? Also, the second question is that in 2021, she didn't pay herself a dime. So can she use that one to pay for her whole year salary? And
Yes.
third question is that we have an outside area for the kids. And when last time the licensor came in, they gave us something saying that we have to make an outside area, like a covered area, so that if it is rain or something, they still can go out and can play in that covered area, which we did. So can we use that money towards that one as well?
Yes, you can.
Okay. Because there was the labor cost, the material and all that one. So that's why we were wondering, because it was not cheap one. I mean, the labor and all the things they have to make the ground and all that one for the kids area. And they can see that we did make the area for the kids with all the toys and everything, so that if it's raining or snow or whatever, they can go outside.
Yes, so you could do minor renovation, you could do fencing, you can do outdoor play area, cover sheet for children, whatever it is to enhance your daycare, as long as it does not require a permit, or you're not moving a low
bearing
wall,
low bearing walls.
load bearing wall, you should be fine.
Yeah, we checked with the people who were constructing it, and they said that we don't need anything from the state, because if we somehow connect it to the building, then we do, but it's like considered as a separate. So that's why we didn't need any permission from the city or the state.
Okay.
And the deduction she gave, she had, when those good days, she had 12 kids, but then it dropped down to 4 kids, because most of the parents, they were working from home, so they were keeping the kids at home. Plus, they couldn't afford the daycare because they were either let go or something. So we got a written thing from each family that how much she gave a discount. And one of the family, they were coming for free because she was a student and she had a job, and we wanted to help her. So technically she was free the whole year, and she wrote down the statement. We have her signature and everything. So can we use the waiver for that amount as well?
Yes, you can.
Okay, because I'm trying to use that one. I was listening to And he said that if we did the payroll, then obviously we have to go back and have to pay on her income. And like he said, I'm trying not to pay Uncle Sam anything. I'm trying to use for the benefit of the families and for the daycare.
Right
They
on.
already, Uncle Sam is already taking a lot from us.
No money for Uncle Sam. I hear you. Thank you, Rose. Thank you so very much. All right,
Okay.
everyone. Is there anyone? And we have 15 more minutes together. Anyone else who has a question?
I have one quick question. I think you probably went over it in another class, but I'm still kind of confused on the difference between the program and the add-ons. It seems like those are kind of the same, where I could use the operating costs for both of those, or is there a definition between those two?
There is none, honey. There is one. Use it as a one amount.
Awesome. Thank you so much. I really appreciate you guys. A great service you guys are providing.
You're welcome. Thank you. You guys don't forget to leave us a good Google review so you know how advertisement goes. Your feedback is much appreciated. So anyone else have a question before? And I know I answered some of you guys' question in the chat box if you sent me a question directly.
Just a small,
really quick question.
Go ahead, ask your question.
Sorry.
Jennifer.
I was going to ask if we got our thing in December. I'm an FFN, so I didn't get a large sum of money, but I did get the allowed amount and a couple add-ons. And what I wanted to know is if we'll get our thing for the taxes, if we didn't use all of it, how do we do that for if we used part of it and we didn't use all of it on the taxes? That's where I'm a little bit lost.
So, Jennifer, for Jennifer and any FFN provider that's sitting in here, we will have a FFN series starting February 8th, and we will send that out to you guys. But to answer your question, use it just as a payroll. Pay yourself.
Okay. Okay.
Yeah.
Okay.
Yeah, and document it in one piece of paper. Your FFNs don't get a lot of money, so document how much bonus you gave yourself from the workforce amount, what payroll amount you gave yourself. If you pay any medical premium,
for you to do, you are so I can give you this bonus, babe.
I'm sorry, Tammy.
Okay.
Was that a question?
Oops, I am sorry. I did not realize I was unmuted.
It's all right.
Thank
Jennifer,
you,
did
though.
that make sense?
Yes. That was very
Okay.
helpful. Thank you very much.
You are so welcome. Any other question, you guys, before we call it a night? Alrighty. Thank you so very much once again. We appreciate each and every one of you guys. I know this is a moment of happiness when we get funding, but also moments of scare. We're here to support you, like we said. To next week, we will have another Q&A session. It will be a drop-in session where we can answer whatever remaining questions you have. We will take a break for the month of February because we want to focus a little bit more on the FN providers, but we will be back in April to support you. We are always here to via email or a phone. My team, who is in this meeting right now, will send the last patch of emails and phone number for you to call. Please do take those numbers down, those emails down, and email us directly, and we will get to you. You should be receiving some sort of an email from Mohammed. And you could just respond to his email because he will send documents of this presentations as well as the video recordings for tonight's event. I wish you the best of luck. Enjoy the rest of your night and happy Wednesday.
Good night.
You.
Hello, hello. I was have a question, but you did not call my name. Can you hear me?
Oh, go ahead, one shot.
Yeah. I was raising my hand. I was waiting for you to call my name, but you did not. So.
I apologize, Winshad. I did not see
No
it.
problem. I'm shy to speak out, but I'm gonna try. My question's for spending. Most of people when they was like asking my situation and stuff. My husband is paying for mortgage. She already earlier she asked me about this question. So I have 2 kids, my own 2 kids. And I have 3 kids for the day enrollment. And then I lose 2 kids on December. So should I pay for myself right now to spend what I want to do with the money? And then most of the time I spend the money for utility bill and food and for my kids stuff for my personnel. So how I'm going to keep how I'm going to pay myself more than this. I hope you understand my question. I don't know.
I think I do. So if your husband paid the rent and the business owes him money, then yes, you can reimburse him because then the business didn't pay the rent. If you need to pay yourself wages, then you can pay yourself payroll. And after that, you could do whatever you want with your personal money. But from the business, then you have to give yourself a payroll. Does that make sense?
Yeah. Okay.
Okay. Thank you. You are so welcome. All right, everyone. Good night.
Hey, I have a real quick question. I'm sorry.
If they don't want to let us
We're
go.
not going anywhere tonight. Okay.
Okay. Well, I missed the first and the third class. How can I make it up?
We will have a Q&A session, and then for the first class, we're repeating it for are you an FFN or FCC provider?
I'm a family home child care provider.
If they recorded it, it's on YouTube.
Yes, it's recorded. The first class is recorded. The second class is going to be recorded and sent to you guys. So you can watch it, Karen, or you can join the FFN when we're going over what can you use the money for. I think that class is the same for any type of program.
If they also have the PowerPoint to share.
Yes, we will email you also the PowerPoint, Karen.
Oh, okay, because I thought that this was I would get stars.
Did you register for tonight?
Yes, I did.
Okay.
I didn't get see, I missed the class, those 2 classes, and so I won't get credit for those 2 classes then.
It's fine. We will repeat it for you as much as you want. So join us on this next one, okay?
So that'll be in April?
The next one for FFNs for the class that you missed will be in February 8th. We'll send out a calendar invite and you should get an invitation.
Okay, great. Thank you.
All righty. All right. Is it okay if we call it a night or anyone else has a question?
I have one more. So I didn't realize, are we getting stars for this? I didn't realize that.
Yes, so please, I hope when you guys registered, you gave me your merit number.
Yes.
Okay, wonderful. Then yes, you should get your star number. Give us until March to upload it into your merit. If you don't see it in your merit, please email us and we will make sure we'll take care of that.
Thank you.
You're welcome. You should also be receiving a certificate for tonight, and that certificate should be coming from Mohammed. Or please fill your name when you get it and print it out and put it in your file.
Alrighty.
Okay,
Hey, wait a minute.
Wait a minute. Okay, we're here.
We're not
No,
going
this is
anywhere.
Lori again. I never received any certificates.
We will send it, Lori, as soon as we're done with the trainings.
Okay, I want to make sure. Yes.
Okay.
Okay.
I
Thank you.
didn't send you my STARS number. I did not know.
Excuse me.
Bertha, you can send us an email with your star number. We should receive that.
Okay, Jessica, I register every single class and I send my star number and everything, and I haven't received anything, and I've done every class.
Okay, good. So nobody received anything yet because we haven't uploaded it. Once the series are done, then we will give everybody their credit.
Okay, thank you.
You're welcome. All right.
See, I wasn't the only one that wanted STARS credit.
And I won't start a credit. I'm the one giving it away. All right. Can we call it a night now?
Yes.
There you go. Okay. Good night, everyone. Enjoy the rest of your evening. We'll see you soon.
Good night.
Good night. Thank you.
You're welcome.
That was